In this video, I'm going to show you a simple and easy way of improving pretty much any type of trading strategy. And if you do it the way that I'm going to show you, it'll only take you about 10 minutes. And towards the end of the video, we're also going to touch on curve fitting and over-optimization of a trading strategy. The way I like to develop trading strategies is to start off with a general idea, which could be a breakout or some sort of price reversal, and then try and improve on it even further. So for this demonstration, in this video, we're going to take an already profitable day trading strategy, just a simple one, and then I'm going to show you how to go about improving it. And the improvements actually end up almost doubling the size of the average trade, and in turn making more net profit for less trades. I won't be drawing anything out for you on my whiteboard today. What we do is we go straight over to the computer where I'll show you the basic strategy, and then I'll show you the steps to improve it. And if you hang around to the end, I'll leave the link so that you can get the rules to the original strategy that we're going to build upon and improve. So let's go over to the computer now. The basic strategy that we're going to look at to improve is one that I've covered before, and it uses an inside bar on the daily chart, and then the following day it buys breakouts of the high of that inside bar, or sells short breakouts of the low of that inside bar. And the stop loss is the opposite end of the bar, and there's also a timed exit, so whether we're in profit or loss at the end of the next session, then we come out of the trade. So we're not in trades for any more than 24 hours maximum. Now, the method that I'm going to use to improve this strategy comes from an idea that I took from both Larry Williams and Andrea Unger, and it looks at the behaviour of each day of the week. So what we want to know is, does taking these trades on certain days of the week perform better than taking them on other days of the week? We want to see over a large enough sample of trades and a long time, we're actually going to use 10 years to start with, whether or not there is a repeatable behaviour. For example, trades are terrible on a Monday, so we don't want to take trades on a Monday. Trades might be really good on a Tuesday or a Wednesday, but we're going to look into that using the computer. We're going to do these tests on dollar-yen, and over that 10-year period, we're going to be looking from 2008 through till the end of 2017. What I'll do is I'll run an optimization using multi-charts and basically plot the profit made using this strategy, trading each day of the week. So we look at the profit from Monday, profit from Tuesday, etc. And if there's some really bad days, then what we might do is exclude them and see how the strategy performs with those bad days excluded. Some people might call this process curve fitting or over-optimization of a strategy, and quite rightly so. But stay with me, wait till the end once we've seen the results, because we're going to discuss this a little bit further, and then you can make your own mind up. So let's have a look at the screen now, and I'll walk you through each step of these improvements as we go. In this first workspace, we're looking at data from 2008 through to the end of 2017. You can see that here from 2008 through to the end of 2017. And we're going to look at taking trades on every single day and see how that looks. So if we look at the performance report, we can see that we made 3.6 million yen. Reasonable equity curve, it's not bad at all. And let's look at the total trade analysis. We got an average trade of 7,300 yen. We're looking at about 500 trades here. Now let's look at an optimization, taking trades on just one day a week to see how the strategy performs on each day. Now this is the optimization report. If we look on this far right hand column here, we've got trade day, and you see it starts at 0 and then through to 5. Now the reason that we're actually got a 0 there, now 0 is Sunday, and that's because we're using exchange times here, and it's Eastern Standard Time, and markets open at 1700 hours on a Sunday afternoon or Sunday evening. So there is a possibility that we can actually take these trades on a Sunday. So that's why we've got the 0, and then through number 1 is Monday through to Friday, which is 5. So if we look at the average trade values here, taking the trades on the Sunday, notice that we've only got 67 trades. That's because there's only a few hours on the Sunday. Got an average trade of just over 10,000. Then we've got 3.5, 12, 19, 6, and minus 6. Now looking at those results, to me, I would like to see an average trade of ideally over 10,000. It is only a day trading strategy, so average trades do tend to be a little bit smaller. But for this improvement, I would suggest only looking at taking trades on the Sunday, on day 2 and day 3, which is Tuesday and Wednesday, because they have the highest average trades. Thursday, average trade of 6,500, perhaps that's okay. It's a little bit low. Let's just stick with the higher average trades. Now I've also entered this same data into a bar graph, so we can see it a little bit clearer. So let's have a look at that now. And this is what that same data looks like in the bar graph. Sunday, day 0, through to Friday. Now, I said we're only going to take these highest performing days, so the Sunday, Tuesday and the Wednesday. So the next obvious step would be to apply the trades just on these days on that same set of data that we were looking at, and that's exactly what we've done in this workspace. So now let's have a look at the results, trading just the 3 days a week, not 6. We've got less trades, we've only got 300 trades now. We had almost 500 before. Our average trade has now jumped up to just over 14,000. Remember, it was only about 7,000 before, so that's where our doubling of the average trades come in. Let's have a look at the equity curve. And it's still a reasonable equity curve, so that's okay. Net profit, now we've got 4.2 million. That's jumped up from 3.6 to 4.2, and yet we're taking much less trades, so that's good too, because the quality of the trade has increased that much. Now in this next workspace, we've got some extra data. Let's have a quick look. We've got data from 2008 through to the end of 2020. So we've got another 3 years. We've got 13 years of data now. So remember, we looked at optimizing, or how the strategy performed, using up until the end of 2017. So from 2018 through to the end of 2020 is data that we haven't actually seen yet within our test. So what I've done is applied the original strategy, taking all trades to this, and we'll have a quick look at the performance report. We're making 3.9 million net profit, so it hasn't actually made that much more from the 3.6 over those years. The equity curve is still going up, so that's good. Look at the average trade, 6,100, that's dropped ever so slightly. So those 3 recent years aren't quite as good as the rest of that sample period. So the next obvious thing to do would be to apply the best trading days to the new set of data. But before we do that, if this sort of thing is interesting, if you like it, then please give this video a thumbs up now, because it really helps. And if you haven't already, please subscribe to the channel as well. And this final workspace, as I said, is using all of the data. So we're up until the end of 2020, and we're only trading those 3 days a week. So let's have a look, see how that performs. Our average trade is 12,000. That's dropped from the 14,000, but it's certainly far better than the 6-odd thousand that it was trading every day. Let's have a look at the equity curve. And we're still making new highs in the equity, so that's good too. That might suggest that those days that performed less are still performing less, and the behaviour from that first 10 years is still carried on through the next 3 years that we hadn't seen. And I can show you that actually, because I also run an optimisation using that full 13 years of data, just the same as I did when I was using the 10 years of data earlier, and we got these results. Now we'll look at those in a bar graph, because then we can compare them a little bit easier. So this graph on the left is the one you've already seen, for using the data from 2008 through to 2017, and this is the new data, which is including 3 more years, so 2018, 19 and 20. And look at the graphs, they're almost identical. The average trade values have slipped a little bit, but what I'm more interested in is looking how the days are performed. Fridays are still very bad, Thursdays not very good, Monday's not very good, and the other 3 days are still making money. So while some people would argue that doing that original optimization on that in-sample 10 years of data might be called over-optimizing or curve fitting, I understand why. However, I've displayed in this case that taking that extra 3 years of data, or that out-of-sample data that we hadn't seen in that first optimization, that first test, that the behaviour of the market didn't change, did it? So in this case, that curve fitting or optimization certainly didn't hurt us. I often build trading strategies around this kind of biased idea. Do you think it's curve fitting? Maybe it is, but all I care about is if it works, if it continues to make money in the future. That's all I care about, regardless of what people might call it. While this sort of testing is very easy to perform, you've seen how quick it is using software like multi-charts once you understand how to program it. I realise that many of you don't have access and many of you don't use software like multi-charts. I always recommend that you should test every strategy before putting real money to it. Now, you might be doing that manually. You might be looking through charts and logging each trade and the result in a spreadsheet. So the next time you do it and you want to look at something like this, just add an extra column to your spreadsheet and add which day of the week the trade was taken on. And then quite easily you can just sort the spreadsheet by day and look at the performance of each day, and you'll end up with similar data, so similar results to what I've got there. It's going to take you much longer, but that's the way I used to do it before I was using software like multi-charts too. Like I said earlier, if you want the link to the free PDF with the rules for that original strategy, and then you might even want to take what you've learned in this video here for $yen and apply that too. I'll leave that, I'll link the video somewhere, or I'll certainly put it in the description down below. As always, I hope you found this video useful, and until the next one, this is Jared Goodwin, and thank you.